All right, so if you got the fast trading system, how this system works is we use the system to help confirm analysis. Now, what that means is we don't use the arrows that come in the system or on each template to decide if we're going to place a trade or not. What we do is we use them as confirmation. Now, an example of that would be if I were to analyze the higher time frames, like the 4 hour or the daily time frame, and I look at structure, right? I look to see um, what the market is doing. Is it making a higher high, higher low, higher high, higher low? And then in that area, I'd be looking to see, do we have confirmation from the system? And as you can see, even on the 4 hour time frame, we have arrows, right? We have a bullish spike, which is below the 20. The stochastic is oversold. So we already see that the system is telling us we're bullish. Now, in this area, after the market makes a higher high, this is where I'm going to be looking for confirmation from the system to let me know, are we going to continue bullish? And if you go to lower time frames, right, like the 30-minute, you're going to see that off this zone, the system is agreeing that the market should move to the upside. And the lower the time frames, right? The lower the time frame, the more confirmations you're going to get, right? In these areas, you're going to have arrows, right? You'll see them here, right? You'll have arrows in those areas of interest, all right? So all we do is use this system to confirm, all right? Another example would be right here, right? The market made a higher high, a higher low, a higher high, and a higher low. This would end up being an area of interest. And if I wanted to see if the system agrees, I can go down to a lower time frame. And as you can see, we have an arrow pointing in the direction of that bias. All right. So sounds easy enough, but on top of that, you have to understand how to read price action. And what I'll explain to you is, how I look at the chart. I read a naked chart, but first, what you want to understand is, um, you know, how the market actually works and why it moves the way it does. All right. So I'm going to take you to this screen here, which is not looking the way it's supposed to look. I don't know. Oh, there we go. All right. Now, this is what I call the universal pattern. All right. So I'm going to write that here. All right. All right. This is the universal pattern. Now, when you're able to draw these lines, right, within structure, right, a low, a high, a break of structure, and then an area to enter the trade towards sell side liquidity, this is the universal pattern. I'm going to explain it to you in a downtrend and in an uptrend. This here is an example of the universal pattern for a buy. All right. When you're able to draw these three lines, right, within price, within structure, all right. When you have that break of structure, a pullback back to an area of support, and then an opportunity to enter a trade towards buy side liquidity. All right. Now, what I'm going to do is I'm going to take all this off, right? And I'm going to explain to you how the market works, like what the market actually is. All right. All right. We'll get rid of all of this. All right. Check. All right. So if you have been trading, I'm pretty sure you understand what a downtrend is. The downtrend is when the market makes lower lows, lower highs, lower lows, lower highs, and lower lows, right? And if you know what an uptrend is, you know the market makes higher highs, higher lows, higher highs, higher lows, and higher highs. Now, what the market is made up of is of the banks taking and creating liquidity. Now, if you don't understand what liquidity is when retail traders buy against a trend, or they just buy or sell in general, and they put a stop loss in place. A lot of the times, retail traders will buy off of a minor area of support, right? And when they do, they'll put their stop loss below their entry, and then, they may be trading, what they think is, in an uptrend, but overall the market is in a downtrend. And what that does is it creates a pool of money for the market to take when the banks decide to continue the trend in the direction that it was going in general. And in this case, it would be to the downside because overall the market is trending down. Now, not only will one person buy off of that area of support, multiple people will buy. And that's the reason why on higher time frames, the market will pull back in a higher high, higher low formation against the trend. Now, every time retail traders buy, they're going to protect their money by putting a stop loss below the low. And that's what creates that liquidity. All right. So what our goal is going to be is to identify what phase we're in, right? Are we taking liquidity or are we creating it against the trend? Right? Are we taking it or are we creating it? Now, by understanding each one of these phases in the market, we can get an idea of where the market should be going long term and why. And then we should get an idea of where the market is going short term based off of each one of these phases. So you're going to be trading a phase within a phase if you're going to be intraday, right? And I'll explain to you what I mean by that. Now, what you always want to be doing is trading towards liquidity. And I identify liquidity by representing it by an RTD. All right. Now, for an RTD to form, right, we have to have what we call a break of structure. So we have to see liquidity being swept, right? And that's what you're going to draw this blue line. Once liquidity is swept, we know that we have a break of structure, right? Now, as soon as you get that break of structure, you immediately can trap price because now you know you have a mixture of buyers and sellers, okay? Now, here's where you want to sit on your hands because now we have to wait for liquidity to be created. We know that the market already sold because it sold from up here, and we know that as soon as it broke below this low, it stopped out buyers. So what we want to wait for is the market to create an RTD. RTD means reason to drop. All right. That means a reason for the market to drop. Now, once the market pulls back, it's going to pull back into an area of imbalance. And that's what you're going to be looking for, right? You're going to be looking for imbalance in price. You usually see consecutive bearish candles in this area. And then next, what you're going to want to see is there an area of resistance that market is respecting, right? Can this line be treated as support or resistance when the market pulls back to it? Now, once you have this pattern and you're able to draw it, you're going to be looking for your entries always above an RTD. So you want your entry here, and then you want your stop loss above highs. You want your stop loss above the high, right? And then the next goal will be to take out this RTD, and then continue price to the downside. So entries always towards liquidity. All right. Now it's the same thing for an uptrend. All right. A lot of the times, retail traders will sell off of an area of resistance. Okay. And when they sell, they'll put their stop loss above their entry. Now, it's not always just one seller, just like in the example up here. Multiple people will sell after a break of structure to create that pullback to fill that imbalance. We need to have some sellers in the market that are trading against this trend. All right. Now, once these people sell, right, what it's doing is creating another pool of money for the bank to take when the market gets back in line with the trend. So when you get that break of structure, just like before, right, you're going to identify your sellers and buyers, and you're going to just draw your pattern up like this, right? Now, once the breakout happens, once this happens, you want to sit on your hands and you want to wait to see, are we going to start creating liquidity? And the market should pull back into that imbalance, right? This box represents where there'd be imbalance, right? Above this high would be RTP. RTP means reason for the market to push, okay? Now, once the market gets down into this area feeling imbalance and you find that area of support, now you're ready to draw that support level because this is the level that you're going to be looking to buy off of, right? So once you see a bullish pattern in this area, right? You're going to enter your trade here, right? Stop loss can go a few pips below previous structure or way below structure down here. And then your entry will be here to take out that RTP and then head towards your desired take profit, all right? So you're going to want to be able to draw this pattern, all right? Right? You're going to want to be able to draw this pattern on your chart, right? And it looks like I got rid of my arrows. So let me put these back. I don't know how I did that, but I need these here. All right, so give me 1 second to put these back. I deleted them by accident. That's good enough. All right, so now that you have an understanding of what the universal pattern is, right? The reason why the strategy is called slingshot is because our goal is to wait for the market to pull back like you're pulling a slingshot. And then when you enter that trade, you're letting go to hit your target and then your desired take profit, right? That's why it's called slingshot. You're pulling it back and then letting it go to take out RTP and head toward take profit. Now, the market is going to be in one of two phases, right? It's either going to be in a push phase, right? Right, right, right. It's either going to be in a push phase. This phase in the market, that impulsive move, this is your push phase. Okay. That's your push phase, right? Or we're going to be in the phase of creating liquidity, right? So we might be making higher highs and higher lows to create liquidity. All right. So your goal is going to be is which one of these phases in the market in overall, right? Now, you want to do this on higher time frames and you want to do it on lower time frames, right? The higher time frame is going to show you where the market is going long term or where it came from to where it's been. And then what you'll do is you'll trade this pattern, right? Or this phase in the market like an uptrend, right? If the market is trending up on lower time frames. And I'm going to show you what I mean by that. All right. So just remember, right? If the market is showing aggressive selling in the downtrend, then this is your push phase. All right. I'm just going to put PP for push phase. All right. That is your push phase. All right. All right. This phase in the market is a market creating liquidity. All right. I'm just going to put CL here. All right. All right. So we'll draw this up so you get an understanding of what that is. All right. Push phase, creating liquidity, right? And then we know that this is liquidity. We're just going to put L for liquidity. All right. Now, in an uptrend, right, it's just the opposite, right? We know that this phase, the moment it breaks above a high, right, is a push phase. This is a push phase. PP, right? And then when the market pulls back, I'll do this way. When the market pulls back, right, we know that this is creating liquidity, right? And then we go right back into a push phase towards buy side liquidity. Right? Now I'm going to put BL here for buy side liquidity and SL here for sell side liquidity. All right. All right. This is what you have to understand about the market. right? Push phase, when it pulls back, we're creating liquidity, right? And then our continuation, we go right back into a push phase to take out buy side liquidity. Now let's show this to you on the chart so you get an idea of what I mean. I'm going to show it to you on three different levels. I'm going to show it to you on the higher time frame, and I'm going to show it to you down to the lower time frames. All right, so let's look at US 30. All right, let's go to the weekly time frame. All right, now if you look on the weekly time frame, right, you can see that the market is bullish, right? And you can see that the market is making higher highs, higher lows, higher highs, higher lows, and higher highs, right? Right. On the higher time frame, you want to see each peak, right? You can see each peak right here, right? We have the peak here, we have a peak here, right? Peak here, right? And then we have this peak here that's been created, right? So by knowing this, right, we can draw our pattern and get an idea of what phase the market is in overall. Now, if you look here, right here, we have a break of structure, right? This is a BOS, right? This is a BOS, right? That means we have a mixture of sellers and buyers, right? And then the market goes into a push phase, right? After the break of structure, the market starts to create liquidity down to an area of support. Notice it came down, filling 50% of this imbalance and this order block, right? Which makes this an RTP above the high. All right. Now, notice once RTP was created, right, the only way to take out RTP would be to break structure. And as you can see, we got a break of structure. Once we got that break of structure, do you see what happens next? The market goes up, taking out RTP, right? Just like the diagram, right? High, low, break of structure, we pulled back to support, and then we took out RTP, buy side liquidity. Okay. Right. You see how that happens? So now we know that because the market took out RTP, right? We took out RTP, right? Now we know what this phase in the market is overall. Now we know that we're in this phase. We're in the push phase, right? We're in the phase of the market going straight up, right? And the market is making higher highs and higher lows because this is a push phase, right? Right? This is your push phase overall, right? That is your push phase. So now what we're going to do is we're going to treat this data like an uptrend because the market is going up on the weekly. So overall, we're bullish because we're breaking out of this high, taking out RTP, and we just have not started this phase yet. We haven't started the phase of creating liquidity yet. All right. We haven't started pulling back. We're just going straight up and we're going up in a higher high, higher low formation on the weekly time frame. Okay. That's giving you an understanding of how the market works. Now that we know what this is, we can treat this like an uptrend on the daily time frame. Do you see what I'm saying? So now we know that we're in a push phase overall, right? We know we're in a push phase overall. So read the data the same exact way you would read an uptrend, right? We have a higher high, higher low, higher high, higher low, higher high. So look, the market made a higher high, a higher low, a higher high. So if you wanted to understand the reason why this went up, you can just draw your pattern, right? You can see we have a break of structure that gives us a mixture of sellers and buyers, right? So this would be BOS. Above this would be RTP, right? And then down here, you can see that we filled in balance, right? And we hit this order block for a level of support. Now you can see this pattern, right, is the same pattern as this, right? Same exact pattern. right? The market pulled back to support, giving us an RTP. And now we have to just get into this trade to the upside. And as you can see, the moment price broke structure, right? We had a break of structure in here, right? The market took off and it takes out RTP. Do you see how that works? Right? As soon as you get your entry in this area, this is your slingshot to take out RTP overall. So this would be a huge swing and tons of profit. All right. Now, let's get an understanding of why the market is over here. All right. So we're going to clear this up, or I should just move these things out of the way. Right. Right. And to get an understanding of why the market is right here, we read the data. All right. Notice the market made, right, a higher high, a higher low, and a higher high. This broke above this. There's your break of structure. Right. Right? Once you get a break of structure, that gives you a mixture of sellers and buyers, right? We have sellers and buyers, right? And then after the break of structure, we create an RTP and sell side liquidity. So when this starts pulling back, right, down to that level of support, right, this move is this part of the diagram. Sellers selling against the trend, all right? They're selling against the trend, right? And as you can see, we have a trend line here, and the market sold against the trend down to a level of support. Now we know why the market is going up, because now we're in the phase of taking out buy side liquidity. Now we're in this phase of the market. We're back in that push phase, that phase of taking out buy side liquidity. And as you can see, the moment price broke above a high, if we go to a 4-hour time frame, right? The moment this area broke above a few of these candles and pulled back and failed to break the low, the market started going to the upside, right? We had a significant break of structure here, right? And as you can see, we have a high, a low, a break of structure. Above the high will be RTP, and there would be your entry. Market goes to the upside. All right. Now, the same way we read the overall data, we read the data in this phase in the market, right? We know that this market is taking out buy side liquidity. So if we wanted to continue to trade the market, even in this area for New York session, we read the data the same, all right? The market broke above highs, right? We broke above this high. So now we're in a push phase, right? This price action is in the same phase of this, right? We're in the PP. We're in the push phase of the market. This phase in the market, right? We're in this phase on lower time frames, all right? So when you go down to the 1 hour, you can clearly see that we have a high, right? And if you want to, we can just do it this way, right? We have a high, a low, and a break of structure that's moving in a higher high, higher low formation. So this phase is your push phase. This is your PP right here on the 1 hour time frame. Right. So we treat this phase on the lower time frame as bullish, making higher highs and higher lows. Now, as you can see, if you read the data on the 4 hour time frame, and today, very tricky price action. I actually had a bearish bias. Now that I look at it, I wish I had a bullish bias, but we had core CPI today, so I decided not to trade this because of the way price action was working today. But when you see it play out, it makes sense. All right, and I'm going to show you why. Because we're in a push phase and we know the market makes higher highs, higher lows, higher high, higher low, higher high, higher low, still failing to break structures, we can see in this area that, and especially on higher time frame, if we look at it this way, right, that right here, we had a break of structure, right? Right here, we had a wick, and then this price action broke structure, and that gave us a mixture of sellers and buyers. Now, as you can see, we already had a low. We broke above the high. Market pulled back to this area of support, right? Failing to break below this low. And then it gave us an RTP above this high. And as you can see, we have our pattern to trade to the upside off of this wick. right? And this happened right at stock market open, I believe. And then boom, market takes out RTP because we're in a bullish push phase. Trying to trade a reversal here would have been tough. So, I sat on my hands on this particular opportunity today. I watched it, but I wanted a deeper pullback, which still would have kept the market bullish, but we didn't get that deeper pullback, so I didn't enter. But as you can see, this phase in the market is still a push phase, right? So, technically we're not supposed to be entering because of that phase. We're trending up out of the break of structure. Our entries need to be towards a higher time frame RTP so we can get into that trade towards buy side liquidity with a better risk to reward. All right. All right. So that's an example of that. All right. So what I want you guys to understand about the market is once you understand the phase that it's in, you can treat that phase as either an uptrend or a downtrend to trade slingshot, right? So let's go to a lower time frame so you can see, well, actually, let's go to a higher time frame so you can see what I'm saying, right? Right. Now, looking at this, right, out of this consolidation, this area right here, you see how we're continuing to make higher highs and higher lows. You have to be able to identify that phase for your intraday trade within the New York session based off of that phase and then how that phase is structured. And when the market breaks out, it will break out in a higher high, higher low formation before the market does this to create liquidity to give you an opportunity to buy towards that, right? Overall. And that's what I want you guys to be able to identify. Now, the problem with this is if we're intraday traders or scalpers, we're going to look for these opportunities that we can get in and get out, which, makes for, a more high risk trade, but faster money. And that's the reason why we do it. All right. So hopefully that makes sense. All right. Now, looking at how we enter the trades, guys. All right. How we go to lower time frames. I'm going to clean this up, do it on this one. All right. What you have to realize is that what you see on the higher time frame, you're going to see in great detail on the lower time frame. The same pattern we use to analyze our chart is the same pattern we use to enter our trades. All right. And an example of that would be if we were to trade, actually today would have been a good example, but I want to show you something that's a little more prominent. All right. So say we were looking to trade the buy from this area here, right? This buy that came from here. Now, if I were to analyze the chart all the way down to this area, right? To this area, all I would have to do is I identify what phase the market is in at the beginning of the New York session in this area. All right. Now, how you would do that is first you need to know what phase all of this is overall. Right? What phase is all of this? Right? And that stupid indicator does not work for some reason. Right? What phase is all of this? How do we identify why we're making higher highs and higher lows right here? Right? And I just showed you by looking at the daily time frame, right? We identify that we're trending to the upside. We know that this is a push phase based off of the weekly time frame because we've broken above this high and we're making higher highs and higher lows, right? So we know that. And we know that because we broke structure here and we pulled back to this area of support, we know why we're bullish. So that's all we really need to know. All right. Now from there, when you go to that 4-hour time frame or 1-hour time frame, right, we're going to be reading the data as if this is an uptrend. All right. As if all of this is an uptrend. We're reading the data. And as you can see, we want to look at the highest peaks, right? So we know we had a break of structure here, right? We had a break of structure there. That gave you a mixture of sellers and buyers. We know that after the break of structure, we create liquidity, and this is data that already happened. So this is an RTP above the high. We know that right here is your BOS, right? And because of that, we know that the market has pulled back and respected an area of support multiple times. Now, the market is right here, right? This is where the market is, right? And we know that there's an RTP above this wick And each one of these is sell side liquidity. So if I were to put an arrow above, this high and an arrow above this candle, right? And one above this candle, because that data is already there as well. We know that this is buy side liquidity, right? So basically we have this pattern going on, right? So if we wanted to analyze like how will we get into a trade towards RTP, how would I look to enter? Well, I'm not looking to sell, right? And the reason why I'm not looking to sell, even though we're in the phase of creating liquidity, is because even if it sells, I'd still be looking to buy off of that level of support towards an RTP because we are trending bullish, right? But I know in order to trade towards RTP, I need to break structure, right? There needs to be some type of a break of structure before I can get in. And this is what I mean by we use the same exact pattern to enter trades. And I'm going to show you how. Now, once you go down to, say, the 15-minute time frame, right? We can see where the market is. This is where the market is right here, right? Now, how do I get into this trade, right? In this area with an understanding of that it will go up, all right, from that zone, right? We know where the money is. We know the money is above these peaks. We know RTP is above here. And all we want to know is we want to trade toward it. Now, down in here, you could get aggressive entries if you look at the price action here, but we want something a little bit more prominent. We want to break highs. Now, notice what happens. The market does come up and it actually breaks above this high, right? And it pulls back. So technically, I have my pattern here. I have a break of structure that gives me a mixture of sellers and buyers, right? The next phase would be to create liquidity, right? Off of this support level, and maybe I enter on this green candle. Notice it's the same exact pattern. That wick would be RTP, right? So you have your high, your low, break of structure, your pullback, filling imbalance, hitting an order block, and you could have entered the trade right here, and you would have been in the trade. That right there would have gave you 2,300 points. And notice this move takes out RTP, and actually, does it take out RTP? Yep, it takes out RTP and everything, right? It took out all the buy side liquidity where the arrows were. So technically, you could have ended your day on that one trade right there, right? That would have been at 2,400 points. That's perfect, right? But notice once price broke above these highs, now we have a break of structure, right? Above these highs, right? That wick broke above that wick. That creates an RTP, right? Next phase, we trick sellers right back down to that same level of support. You could have got your second entry towards RTP, and then you're in the trade, right? And this is off of the lower time frame. So even if you go to the 5-minute time frame, right, you're going to be able to see more data, right? You'll be able to see more data and get a better risk to reward. Because now this area right here will give you the same exact pattern right here to get into the trade, believe it or not. The market is made up of the banks taking and creating liquidity. So imagine you saw the market come down to this zone and you want confirmation to get in this area. Well, all you needed to do is see a break of structure of the previous move. The market pulled back to support this area right here, and I'll zoom in on it so you can see it, right? This area right here was a high that got broken, right? That high got broken, right? So now you have a high, a low, a break of structure. The next phase would be to what? Create liquidity down to a level of support. Notice this wick fails to break below the low, right? You're going to enter on the open of this bullish candle. Above this high would be your RTP for your entry. I like to just call it an R so I don't get them confused. And then your take profit level can be this RTP right here. And as you can see, RTP gets taken out because we broke structure of the previous move. Okay. So you notice how the pattern is universal, guys? We use the same pattern, right? This pattern right here, if I put a B right here, that would be for break of structure, right? This pattern right here is the same pattern that we're basically showing you right here for your entry, but we also use this to get an overall bias of what phase the market is in, right? You see how the market goes to the upside, right? So that's how that's how the strategy works is you have to just, be able to identify each market phase and trade it accordingly in real time. All right. All right. So hopefully this is not too confusing, but I wanted to at least show you, as many examples as possible, right? We use the same technique to enter the trade as we do to analyze the market, right? Because basically this pattern right here that I drew up, right? This pattern, right? High, low, breakup structure, pull back to support, entry. We use the same exact entry, the same exact analysis to enter the trade right here, right? We have a high, a low, a breakup structure. We pulled back to support, RTP, and then here's your entry right here. You could mark it up this way. That would be your risk to reward on that trade, right? Just like that, right? And you can make RTP or take profit one. If you entered down here, you can make RTP or take profit one. That's 2,300 points. Leave a runner and let it run. All right. And that's how that works, guys. All right. Now, like I said before, in the process of marking your chart up this way, you can use this system to confirm. So if I mark the chart up the same exact way, right? If I mark the chart up and this is my area of interest to buy from, right? And I place my entry here, I want to be able to do the same exact thing with the system, right? And as you can see with the system, we have arrows already telling us that we're right about that analysis, right, in this area, right? The arrows are telling me that I'm right. And then these arrows are only valid when you get a breakup structure. So the moment the market pulls back to that moving average, we know we're correct. Get into the trade, right? And it all makes sense. We're below the channel. If you're using the buy sell template, it all makes sense for us to buy. And that's the reason why the market bought, right? Same thing here, right? The market comes down to this area and I have my pattern, right? And we're at the bottom of the channel, right? This, oops, right? This arrow right here is telling me that the market wants to buy, right? We know this arrow is valid because it broke structure, right? It broke structure here. It pulled back to support. Crazy how I see it now, right? This area right here is your RTP, right? That is your RTP. Market pulled back in a lower low, lower low, lower high formation, leaving buy side liquidity above the highs, right? Buy side liquidity, right? And we want our entry to be below RTP or maybe at the close of the moving average while it's green. We take out RTP just like this diagram. All right. Very, very simple. Even though I didn't catch that trade today, but very, very simple. All right. Let me look inside this and see if you have any questions. All right. Any questions? Another question. You analyze the daily hour, 4 hour, then 15-minute chart in the beginning. When you analyze a daily deal, do you there's a 15-minute or where You're welcome. All right, so let's look at this is NAS. NAS is very similar. All right, so let's look at NAS, right? And we'll look at NAS on the naked chart. All right, now if you go to the weekly on NAS, the goal is going to be to identify the market phase. Now you can see market made a high, low, and a high. So we have a high and a low, right? So this would be BOS, right? Now, if I get rid of these lines, right, we know what phase this is, right? This is a push phase, right? We know that this is a push phase. So we know the market is making higher highs and higher lows, right? We can even see that we have a high, a low, and a break of structure that ran into an area of support, filling imbalance, and this is an RTP. So we know long term, NAS is probably, oops, right? So we know long term, NAS is probably going up to take out RTP, right? So we know why we're bullish right here overall, right? We know we're in a bullish uptrend, taking out buy side liquidity above these highs, right? And we have to see this on the weekly time frame to understand where the market is going and why. All right, buy side liquidity, right? So now we're going to take this data down to the daily time frame, right? Because now we understand why we're bullish right here, right? We know why we're bullish. Now, until we really break this high, we don't really fully know if we're going to go to the upside. We may pull back and then continue to go up. But from what we see now, we know that we're bullish and we understand why. Now, say before any price action happened, we go down to the daily, I mean, to the 1 hour time frame, right? Now we're going to treat this data just like we would treat the market in an uptrend like US 30. All right. Same exact way. Right. So coming to the market, right, we can see that the market made a higher high, a higher low, and a higher high, right? And the market went back into a push phase. So right here we have a high and a low, right? We have a BOS, right? And then we continue to go up in a push phase. So this is a P a P a P a PP for push phase. I'm trying to basically say what I'm about to type, right? We know that's a push phase. And this push phase is going up in a higher high, higher low formation, right? We haven't started creating liquidity yet, right? We're not in this phase yet of the pattern, the universal pattern. So as you can see, if we were to trade this day, like this particular day right here, we would need to understand why the market is right here at the beginning of the New York session. We already know we're in a push phase, so we're not going to sell because if it sells, then we're playing right into the phase of buying towards RTP, right? But we haven't created an hourly RTP yet. We have, a few entry RTPs within this uptrend for a scalp, but we don't have a prominent RTP for a 1 hour buy like in this area here to the upside. All right. So how do we get into the trade? Well, we have to read this data for our scalp. So we'll go down to lower time frame and you can clearly see, look at the highest peaks. We made a higher high, a higher low, and a higher high. We had a high that failed to break and then a break of structure. All right. So that's a good sign that we're going to continue bullish. Now, notice the pattern. We have a high and a low, break of structure. The next phase is to create liquidity down to an area of support, filling imbalance, right? The white line is pretty much showing us that we're at support, right? And then remember, this is the 30-minute time frame. So this is our area of interest on the lower time frame right here. So when you go down to the 5-minute, you want to read this data, right? We know that above the high is RTP. We know this is RTP, right? Our goal to trade toward that. So we need to see a break of structure of this move to get into this successfully. All right. So let's go to 15-minute time frame, 5-minute time frame, and look at that area. All right. Now you see this is our crap. All right. This is our area of interest. We need to, analyze this data to get in. Right. And as you can see, we have our entry RTP up here. Remember, our long-term RTP, right, was actually our entry RTP is our long-term RTP because we're scalping. But we know that anything above this line is buy-side liquidity. So we know that once we get above this line, right, anywhere there was a pullback, right here, anywhere there was a pullback, right, or a new candle forming, right, we know that there's liquidity for the market to take out above each high. We know people sold above that high. Now our entry, right, what we want to see, I get back to that area, right, is we want to see a break of structure within this price actually to get in comfortably. And we don't really get that pullback that we're looking for until we actually break above and take out RTP. But as you can see, if you look down in here, eventually price does break above a high. We do feel a little imbalance right here, right? Market does pull back, right? 1-minute time frame will show you. I don't know if it'll let me go that far back. Let me see. All right. So right here, you can see this area got respected multiple times, once, twice, 3 times, right? There's your break of structure right there on the 1-minute, right? We broke above this high, we pulled back, and we just kept respecting it. And then you could have got your entry right here, right? Not the best risk to reward. It's only 500 points, but stop loss would have had to go way down here. But as you can see, market does take off, right? And we ended up breaking structure here as well, right? Slightly, we barely broke structure, and the market pulled back, giving you an opportunity to get into the trade as well. And this is just to get an aggressive entry, right? To get that aggressive entry, right? Now, in order for the market to, a strong confirmation for it to take off, if we waited for the market to take out this RTP, you can clearly see that we're already in the zone to push, right? The market breaks above the high, it pulls back slightly, and you could have got your entry right here off of this level, and you could have got in. My goal would have been to trade toward this RTP. If you don't get that prominent pullback, sometimes you just gotta enter that trade aggressively and just get in, because down here is going to give you the best risk reward. If you enter here, you're basically entering the market in a push phase, leaving this wide open to go into drawdown. So as long as you can accept the risk, or go in with a smaller lot size and wait for the next pullback for a bigger lot size, you're golden. But I like to trade towards RTP off this pattern. And as you can see, market goes to the upside, right, on this particular day. All right. So hopefully this didn't get too confusing, but I kind of want you guys to see, you know, what you want to be looking for when you go to place your trade, right? I want you to see what you're looking for, right? If the market is already buying above a high, you have to wait for that pullback. And unfortunately, the market gave you multiple opportunities to trade toward an RTP before, it decides that, it wants to take off. And once this takes off, if you try to chase this, this is where FOMO sets in. You will eyeball it, realize you're missing the move, and then you'll enter aggressively right here and get stopped out right here. That's just the way it goes, guys. All right. That's just the way it goes. Right. But, hopefully you guys are getting a better understanding, right, of just how to go from that higher time frame and identify what phase the market is in, and then continue to trade in that phase until it gives you another phase to trade where it makes sense on that higher to lower time frame correlation. All right. But hopefully, these are, good enough examples for you to, understand clearly and, back test on your own. All right. I know these examples are all on indices. We can look at gold. I don't particularly like trading gold, but you can clearly see the phase the market is in on gold by just going to the weekly time frame. All right. All right. So you can see this. This is the weekly time frame. Market is bullish. We broke structure here, right? Right. The market went into a push phase, right? And then we broke above this structure, right? And now the market is clearly in a bullish push phase. That's all you need to do first to identify what this is. Now you know why the market continues to buy, even though it would normally show signs of reversal, or your mind would be thinking, okay, the market's reversing, right? So now that I can go down to, the daily time frame and look at price, right? I'm not lost with understanding why we're making higher highs and higher lows above this level right here, above that level. Like I understand why we're going straight up because this is a push phase. All right. That's this phase in the market, right? That's this phase. We haven't started creating liquidity yet overall. So we're making higher highs and higher lows in that push phase. That's all you need to know. Now you read this data like an uptrend, right? I'm sorry, all these examples are bullish, but so now to get an understanding of where the market is going, just read the data, right? Right here, we know we had a break of structure, right? So we have a high and a low, right? After the break of structure, next phase was to create liquidity down to a level of support, filling imbalance, right? So we know above this high is RTP, right? Right? So off this level, what are you looking to do? We're looking to buy, right? So if you go down to lower time frames, like 1 hour time, the 1 hour time frame, which is a big difference from the 4 hour. All right, we'll go back to the 4 hour, right? Remember, crap, my line just disappeared. All right, remember that above this high is RTP. And when the market pulls back, this move is taking out buy side liquidity, right? And we're still moving in a higher high, higher low formation. So this is a high, this is a higher low, right? That failed to break. So we're trending up, right? And we're still in the process of what most likely doing what? Going up to take out RTP, right? So to get an understanding of, how are we going to trade within these days? Well, gold is kind of finicky. It doesn't give you, really good New York opportunities unless you're trading on the 1 minute time frame. But if you look at this overall, you could see that, okay, well, this area right here broke above this high, right? So we have a high, a low, and a break of structure. The data is already there to give us an understanding of why this is here, because what happened? It pulled back to a level of support, right? We know that this is an RTP as well. There's buy side liquidity above this high, right? And we know that this move is doing what? It's taking out buy side liquidity from this pullback to this level of support, right? So we understand what's going on. Now notice we had a failure to break above RTP right here. So if I draw a line right here, we failed to break RTP, or did we? I really can't tell now. Let's see. Nope, actually we did. We took out RTP, right? So we know why we're pulling back, right? We just took liquidity. Now we're creating it again. Now, remember, overall, this is the RTP that we want to take out. We want to take out this high, right? And the only way to trade toward this RTP would be to break structure of the previous move, which already happened, right? So now all we're doing is we're looking for a level of the market to enter buys towards to take out this RTP and that RTP because the market will most likely will go to the upside based off of the data that I'm showing you here. Now, what I'd be looking for is the market to respect somewhere within this zone, right? And it looks like it may be respecting this level, and to take out RTP to the upside, right? Because we have buy side liquidity in this area. This would be my area of interest, right? Right here on lower time frames. If I go down to the 30-minute time frame, right? Now all I really need to see is a break above highs, a pullback to support, and then a move up to take out buy side liquidity, and this daily time frame RTP. That's all I would need to see, right? If I don't get that, then I won't buy. Or if you want to try to get in aggressively, you may have that pattern right here, right? Off of this zone, and you can get in with a better risk to reward and get in a lot sooner. And the market could go up from that level. Because right here we have a high, a low, a break of structure, a pullback, right? An opportunity to trade towards buy side liquidity off of this level of support right here, right? Actually perfect, right? But you see how just understanding the phase of the market, now when you get down to these lower time frames, you're not lost, right? We know exactly what this leg is and why we would go up from here, or we would want the market to go up from here. We know why. Because of the higher time frame analysis of taking out this RTP, of taking out this RTP and understanding that the only way to take it out was to break structure. This did that. It came back, it failed. So we're just en route to take out this RTP and a new level of liquidity that was created in this uptrend until the market is ready to reverse. All right. So, and that's my thoughts on gold. I actually called this trade all the way down here to go up and didn't take that, but I actually called that trade. So, all right. So I'm hoping, this is giving you a better understanding of the market. A lot of people don't look at the charts this way. There's still a lot that I need to fine tune within this strategy. If I could, really identify each order block perfectly, then my entry would be that much better. I do tend to experience quite a little more drawdown than I would like to. But the confidence in the strategy, I know to go in with a smaller lot size. And then when the market starts to push, I can load it up when I'm 100% sure we're going to go and, reach our target. So you just kind of got to be smart about it sometimes. But a lot of the times, the trade works out and you just, you have to trust. But, hopefully, you'll be able to, review this and, understand how, it works. All right. Now, say I wanted to confirm, that we are going to go up from here. I can go right to the system, right? We can go to buy sell, which is one of my favorites now. And as you can see, we got confirmation that we could possibly be going to the upside, right? These arrows are not valid until we get a break of structure. I would like to see a break above something really substantial to really say we're going to go up long term. But right now, it's saying that, we should move to the upside on 15-minute time frame. It's saying it on the 30-minute, right? Don't really have confirmation on the 1 hour just yet. But, there's still signs of rejecting this order block and going to the upside. All right. So hopefully we'll see how this works out based off this analysis. But hopefully, you guys got a good understanding of this strategy and these market phases. I really haven't gone over these market phases this way and or at least on this scale, like with this diagram here, because this is the most important part of your analysis. Because once you get that understanding of each market phase on an overall level, when you go to trade it, you can trade like an uptrend or a downtrend because you know exactly what it is, right? And that's the beauty of understanding market phase and then understanding that pattern. And I'm telling you guys, if you shy away from trying to get that quick scalp and you look at the overall pattern overall, you'll realize that you may wait 3 days to catch this move, but it's worth it. You know what I'm saying? Versus trying to catch the crumbs, right? Because I shied away from catching this today because technically I should have been in it right here. You almost want to wait for the market to set up a 1 hour or 30-minute RTP, and you find that zone below it to get into that trade. Then that way you can hold it for a few days or a majority of the day for significantly more pips that are stress free. All right. And that's something I'm slowly trying to transition into. I did end up taking a trade on NAS today. I recorded it, but I couldn't record the outcome. But I did take a trade on NAS today, just a quick scalp, and it's actually right in this area. And the reason why I took the trade is because of what I saw. And basically what I saw is I still saw a trend in market, and then I saw a pullback with a break of structure. So I technically just traded this little scalp right here, right? Right here, right? I had a high, a low, break of structure. We pulled back this level of support. Didn't get the best entry. And I probably should have waited for the market to break above the moving average, but I did enter kind of in this area right here. Stop loss was kind of right here. I almost got stopped out. My stop loss was literally like right in this area, almost got stopped out. I have a video and I'll probably post it. And my goal was to take out RTP and some buy side liquidity. Ended up getting out of the trade because stock market was about to close. And I entered this trade later in the day. But I went into some really good profit. I was kind of mad I took this trade. Honestly, I probably shouldn't have, but I got in and I went up and was in profit about 500 points. And I ended up right here. And I was home watching. I was out watching, and I was like, damn, I shouldn't have entered. This was stupid. But this pattern normally holds. Like there's really nothing keeping the market from going back up, right? Because of just how it's structured, right? We know buy side liquidity is here, there's imbalance here, and the market went up. So I ended up making this level right here, like my take profit. I think it was a little bit higher than this level, and I ended up getting out of the trade from here to here. So it was about there was about 1,200 points or more because I was in two positions, right? But as you can see, the goal was to take our RTP. Market's starting to open, and look what's happening. We broke structure, we pulled back. We met end up taking out this RTP, or at least getting close to it. That's just to show you, the confirmations are valid, right? We had arrows right here, right? We have a bullish spike. We had a break of structure. These arrows are valid. After the break of structure, the next phase to create liquidity down to support, filling imbalance, exactly what the market did. And then, like I always say, in order, and this is the reason why I entered off these wicks, in order to trade towards RTP, we need to see a break of structure. So look, we have a lower low, a lower high, a lower low, and this break of structure. So I had an entry pattern, and that's why I entered right there. Right? I entered off of these wicks because look at what we have, right? We have a high, a low, a break of structure, a pullback, rejection, rejection, rejection. Obviously, I'm going to enter, and the market decided to be crazy. It went up and then came back down, swept sell side liquidity, did not take out my stop loss, believe it or not. And then it went up and took out this RTP. And honestly, we had a new RTP right here, right? Which means this is our new level of support, RTP. It all makes sense now, right? Had I had the system on my chart, I probably wouldn't have entered because I would have saw this moving average being black and would have got my entry over here somewhere. But that was way later in the day. That was the only trade I took today. I just didn't post it because I wasn't home to watch it. But that trade did play out. So I'll post that and let you guys see that. All right. But that is I guess that's going to be it, man. Don't know if there's anything else. You have any other questions? Okay. All right, then. All right. So what I'm going to do is I'm going to end this here, and hopefully you guys will get some value out of this. All right. Have a good one.